All right. So as I was saying, we were able to determine where the weekly equilibrium line is going to be roughly. So the next step to take, remember the first step is to mark out the monthly equilibrium line and to roughly determine where the weekly equilibrium line is going to be. That's the first step. The second step is to switch to the D1 time frame, okay? Is to switch to the D1 time frame. Now, on the D1 time frame, what are we going to be looking for on the D1 time frame? Let's look at it. Let's look at what we are going to be looking for. Now, if it is a sell alignment, whenever you switch to the D1 time frame, you should only be looking for a bearish candle. If it is a sell alignment, whenever you switch to the D1 time frame, you should only be looking for a bearish candlestick. However, if it is a buy alignment, whenever you switch to the D1 time frame, you should only be looking for a bullish candlestick. All right. So now, since we are able to say that, since we are able to see that this is a sell alignment, let us switch to the D1 time frame now. Now this is the D1 time frame. On the D1 time frame right now, remember we are trying to analyze last week to know what is going to happen this week. Remember, isn't it? Don't forget, isn't it, guys?
Yes.
So now, last week, let's check on the date of last week. Let me open my calendar here. So let's look at the calendar. On the calendar, last week this is the date for last week. Last week is Friday is on the what? 4, isn't it? Friday is 4, as you can see. Thursday is what? Thursday is 3. Wednesday is what? Wednesday is 2. So whenever I'm talking about 4, 3, 2, you should be able to know what I'm talking about. You should be able to know that Friday is 4, Wednesday, Thursday is 3, and so on. You understand? Let's move on. So going back to the chart, main chart now, let's look at the dates on the candlesticks here, you understand? I'm trying to look at the dates. Let's look at the date on the candlesticks here. So whenever you switch to the D1 time frame, look at the date of last week candles. Then that is the, on that area is going to be the current week you are looking at. So it means that current week you're analyzing, look at the dates on the current week you're analyzing, look at the candlesticks there. So this candlestick is on the 4, as you can see, isn't it? This bullish candlestick is 4, right? Can you see the date below on the candle? Madam,
Yes,
can you see the dates? 04/08/2023.
Yes.
Mr. Lindo, can you see the date on this bullish candlestick? This bullish candlestick on this one is 04/08, which means August.
Correct. Right.
Which means that this other bearish candlestick is which day candle? Monday candle, isn't it? This
yes.
is Monday candle. And it means that I'm going to clean out that Monday candle because as at the time of the analysis, we didn't have any Monday yet, isn't it? Remember?
Yeah.
As at the time of the analysis, we didn't have Monday yet. What we still have is Friday, Thursday, Wednesday, isn't it? That's what we have. So Friday is a bullish candle. Remember, in a sell alignment, we are not going to be looking for a bullish candle. So it means no zone on Friday, automatically cancelled. Friday is cancelled. Do you understand?
Yes.
We are not going to be looking at any zone on Friday. Let me show you what Friday looks like on the H2 time frame. Remember, this is Friday here. Look at this is 4, this is 7, this is 4. All right, look at it. This is Friday. This is Friday here. This is Thursday here. All right. This is Wednesday here. Okay. So it means that, and this is Monday, this is Monday, this is Tuesday, this is Wednesday. Okay. Now it means that we are not going to be looking at any candle on Friday because the candlestick on Friday on the D1 time frame is what? Is bullish. And we cannot be looking for a bullish, we cannot be trading on a bullish candlestick in a sell alignment, So it means that in a sell alignment, we are looking for a bearish candle on the D1. Do you understand? We are looking for a bearish candle on the D1. Madam Ozioma, I hope you are following, okay? Now let's go to the D1 candle now. Since the other candle is bullish, it means that, let me erase these ones out, these Monday candles here. You know the reason why I'm erasing them, right? Because the video I'm sending to you guys also, I talk a lot about the reason why I'm erasing it. So, but here, even though you've not watched the video yet, you understand the reason why I'm erasing it, isn't it? Hello, guys, isn't it? Do you understand?
Yes.
why?
Yes, sir. Yes, sir.
Now, it means this bullish candlestick on Friday is out. We are not straight taking it. It means the next candlestick is bearish. Now, there's something very important you need to know about this. Now, on this bearish candle, this is what we are looking at. A bearish candle in a sell alignment. That is what we are looking at. Now, it is very important to know that the type of bearish candlestick we look for. Let's see the type of bearish candlestick we usually look for. You can see this bearish candlestick now. This bearish candlestick, the body of this bearish candlestick, the opening is here, the closing is here, right? You can see that this bearish candlestick looks like square in shape, isn't it? It looks like square, right?
Correct.
This bearish candlestick looks like square in shape. So I don't like, you shouldn't be taking any trade with this type of candle. It means that we don't have much imbalance on that candle. There's not much sell imbalance on the candle. However, any candle you see that the candle is looking like a rectangle in shape, you can see this bearish candle now is looking like a rectangle, yes or no? The body is looking like a rectangle, yes or no? Madam Ozioma, yes or no?
Yes. Yes.
You know what a rectangle is? You know, I believe we all know what a rectangle
Yeah.
is.
Yes.
We all know what a square is.
Yeah.
But this rectangle I'm talking about, I'm not talking about a rectangle in this form. No. I'm talking about a rectangle in a form like this, not in a form like this, not a rectangle like this. Because in a form like this, it is going to be a doji candle. This is going to be a doji candle. A doji candle is not what we are looking for. All right.
Yeah.
Now let's move on. Anyways, let's move on. So the bearish candlestick we are looking at here, since we've already canceled out, let me erase this again. Now this thing is very important that you need to understand. So Friday is already canceled, we know, which means the other bearish candlestick is on the what? On the third. This is on the third Thursday, isn't it? This candle.
That's Thursday. Yeah.
And this candlestick looks like what? It looks like square or a rectangle.
Yeah. It's a small rectangle.
It is a rectangle in shape, right? It's looks like a rectangle in shape, isn't it, Mr. Lindo?
Yes, sir.
Correct. Yes, it is.
Now let's quickly see what a supply is. Let me bring out my old picture. Now this picture you are seeing, I generated it back in 2018. Just when I was creating the course. Let me just. This is a long time picture. All right, guys, can you see this picture, guys?
Yes, sir.
This picture, back then when I don't have any graphic designer, I'm still going to allow a graphic designer to do this thing for me with this. But I have everything in the other website. You know, my other website is forexprotradingacademy.com before I changed to Gova Trading Academy, right? All right, now.
Yes, sir.
Let us assume that this is a bearish candle. Okay, let us assume that this is a bearish candle. On this bearish candlestick, first of all, if it is a bearish candle, let us ignore this demand for now. Just erase this in your eyes. Assume that this is not there. Okay, just for the sake of the explanation, let us assume that this candlestick we are looking at right now is a bearish candlestick. Madam Ozioma, are you following?
Yes, sir.
A bearish candle, you know, a bearish candlestick usually look like this. It usually look like this. This is a bearish candle. We have a bearish candle that looks like rectangle in shape. We also have a bearish candlestick that looks like square in shape. You understand? And let us assume that the candlestick also have wicks. Let's say this is the wicks of the candle. Let's say this is the wicks of the candle. This is the wicks of the candle. This is the wicks of the candle here. Now, This is very important that you don't miss this. Now, in a sell trade, the opening of a bearish candle is here. The closing of a bearish candlestick is here. That is one. Two, the supply of a bearish candlestick is usually from the open. If the candlestick is having wicks, remember that our proximal line, distal line, that's our yellow zone that we usually mark on the lower time frame. I hope you guys know it. So let's say if we switch to a D1 time frame, let us assume that this is a D1 time frame candle, okay? Let us assume that this is a D1 time frame candlestick. So if it is a D1 time frame candlestick, that's our yellow zone that we have on a lower time frame, maybe on a 1 hour, any time frame, a lower time frame. We then switch to the D1 time frame. That yellow zone must be sitting anywhere around here. That yellow zone should be sitting anywhere around here. So anywhere around here is what? Supply level. Do you understand?
Yeah.
Which means it is going to be a good trade. It is going to be a good trade. However, at any moment in time, at any point in time whereby your zone, that's your yellow zone, at any point in time whereby it is sitting on the body of the candle, that yellow zone is sitting on the body of the candle anywhere here, it is not going to be a good trade. Do you understand? It is not going to be a good trade. Don't take it. You should ignore it. Do you understand?
Yes.
Even if that trade work out, it is going to work out by what?
Luck.
By luck. And do you come here to take trade by luck?
No.
That is why we are running from technical analysis, not to be taking trade by luck. That is why we are running away from ICT smart money concepts, not to be taking trades by luck. We are trying to take trades here by using logic, isn't it? So if we want to be taking trades using logic, we need to, in a sell trade, our sell trade needs to be sitting in a supply side of the candle, which is here. That is the supply side of the candle. Now let's move on. So, and this is a good imbalance on the candle. It means that this candlestick is having a very good sell imbalance. But what about this candle? You can see that the opening price and the closing price are what? They are far apart, isn't it? On this one, it is the opening price and the closing price is far apart to each other. So it means there's imbalance on the candle. Do you understand? There's imbalance on the candle. Imbalance, I can also spell imbalance as IMB, imbalance in short form. So what about this other bearish candlestick that looks like square? This one that looks like square, you can see that the opening price and the closing price are very close to each other, isn't it, guys?
Yes.
So
yes.
there is zero to little or no imbalance on this type of candle. If you are taking trades on this type of candle, even if your zone is sitting on the supply of the candle, the trade might work, it might not work, because there's very low imbalance on the candle. For example, we have imbalance of, we have buyers, and then we have sellers. We have buyers, we have sellers. So, and let's say the buyers we have is something like this. We have, let's say 95 buyers, and then we have 5 sellers. Is there this thing here? Okay, yeah, there is imbalance. There's high imbalance here. Let me see an example. Let's say, okay, yeah, let's use this. Let's say we have 45, or let's say 45 here. Okay, 45 here, and let's say we have how am I going to put it? Let's say we have 45 here, and let's say we have 55 here. So you can see the gap between these two imbalance is very small. What is the difference in these two market participants? The difference is just what? 5 different. 5.
That 56 or 50?
That's
11.
10. That's 10.
Is
Sorry,
it-
that's 10.
Okay.
That's
Is that 56 or?
Okay.
Okay.
So you can see the 10 imbalance is very small. It's very small. You understand? Very small imbalance. But what if we have an imbalance like this? What if we have an imbalance like this? In the market, we have 100 imbalance of buyers, and then we have 20 sellers. You can see that there's high imbalance in this type of market, isn't it?
Yeah.
If we minus 100 from 20, you can see we still have 80 left, 80 buyers left, isn't it?
Yes.
We still have 80 buyers left, and that 80 buyers that is left are going to have they are going to have the power to push the market up. They are going to have the power to push the market up. So what we have here right now, sellers are very powerful in this area, but in this area, there's very low imbalance here. But let's go quickly. I don't want this Zoom to end. Let's go quickly back to the chart. So the purpose of this picture is just to show you that in a bearish candlestick, the supply side on the bearish is anywhere around here. Hold on. It's anywhere around here. You understand? Anywhere around here. Okay? Your zone can be sitting anywhere around here. It is supply. Do you understand, guys?
Yes, sir.
In a sell trade. However, in a sell trade, if your zone is sitting on the body, remember I told you it is not a good situation in a sell trade if your zone is sitting on the body. However, in a buy trade, let's go to a buy example. Let's say this is a bullish candle. Hold on, guys. Hold on. Let's say this is a bullish candlestick. On this bullish candlestick, we all know that the bullish candlestick can also have wicks. Okay, I'm going to answer the question here. Sometimes the bearish candlestick might not have wicks.
Good.
Okay, I'm going to answer your question on a bullish candlestick. Do you understand, guys? I don't want to go back to that bearish again. Madam Uziom, I hope you understand what I'm trying to say.
Yes, I was trying to ask you the same question.
All right, I just forgot. All right, let's move on. So in a buy trade, if you have a buy trade, your buy trade can be sitting anywhere around here. That's your yellow zone can be sitting anywhere around here. This is the demand. Remember, this is the opening of the candle. This is the closing of the bullish candle, isn't it?
Yes.
So it means that your buy trade should be sitting at the bottom where I said it is going to be sitting anywhere around here. It is a demand. Anywhere around here is a demand. Anywhere around here is a demand. Okay. Now, at any point in time whereby your zone is sitting on the body of the candle, your zone is sitting on the body of the candle, it is not a good situation. You understand? Don't take it. It is not a good situation. If your zone is sitting anywhere around here in a buy trade, it is not good. What if the candlestick doesn't have wicks? What if the candlestick does not have wicks at the bottom? Then how are you going to determine if it is how are you going to determine how to mark your demand area or something? Then it means that that's your proximal line, distal line. Remember, our proximal line, distal line is something like this, isn't it? It is just a box like this, right? Our yellow zone.
Yeah.
Isn't it, guys? So let's say that our yellow zone, when we switch to the D1 time frame, you should be able to see that your yellow zone in a way like this. Can you see that?
Yes.
You can still see that it is at the opening of the candle, isn't it? It is still at the opening of the candle. Yes or no, madam?
Yes.
Okay.
Okay. So that is it, guys. That is it. So the same applies for a bearish candle, okay? The same applies for a bearish candle. Let me just do a bearish example quickly because some might not. So in a bearish candle, it means if the candlestick does not have wicks, your supply zone can be sitting like this. You understand?
Okay.
So that is it. Now remember, a good bullish candlestick, going back to a bullish candlestick again, a good bullish candlestick should look like a rectangle in shape, isn't it? Should look
Yes.
like a rectangle.
Yes.
The opening price and the closing price should be far apart. But this type of candle that looks like square in shape, remember I told you to be careful on this type of candle. There is no imbalance in this type of candle. So if you have a zone that is sitting in the demand side, even though it is sitting in the right area, but the candle is not a good candle, don't take it. Don't take it. Now let's move on. Let's move back to the chart. So before we do that, you can see if this candlestick is a bullish candle, it means that our zone, our buy zone, our demand, our buy zone can be sitting anywhere around here on the daily time frame. You understand? It is a demand. It means it is sitting in a demand area. But at any moment in time whereby our zone is sitting on the body of the candle, it means it is not good situation. Do you understand, guys? I hope that is clear.
Yes, yes, sir.
Let's move on. Let's move on to the chart. Let's move back to the chart. Let's move back to the chart. Now, back to the chart. Back to the chart now. This is very important. Don't miss this. Let me erase the Monday situation that we have since it has not happened yet as at the time of the analysis. So this is what we have. What we have is that Friday is not what we are looking for. Since Friday is not, since we are in a sell alignment, remember, isn't it?
Yes.
Madam Muzoma, isn't it? In a sell alignment, we are looking for a bearish candle. So this bearish candlestick looks like a rectangle. So it is very good. What we need to do is to mark out our proximal line distal line. Can you see my proximal line distal line tool here?
Yes, sir.
Mouse on my mouse. Then I'm going to put that proximal line distal line at the candle wicks. If the candle is having wicks, put it there roughly like this. Can you see the way I put it?
Okay.
You can see it is in a straight form on the candle. It is in a straight form on the wicks like that. Not
Okay,
like
it doesn't have to cover all the wicks.
no, you can just we are marking it roughly. We are marking it roughly. You can mark it like this, but anywhere you want, just put it at the wicks. Do you understand? Just put it at the wicks. So, but don't mark it like this. Don't mark it like this. Marking it like this, it is no longer on the wicks. It is moving to another place. You understand? And don't mark it like this. Make sure you put the 3 dots on the wicks. Do you understand?
Okay.
Now after marking this situation, you need to switch back to the lower time frame. The lower time frame is from H3 downwards. So let me switch back to a lower time frame, that is H3. After switching back to a lower time frame, remember on the D1 time frame, the candlestick looks bigger, isn't it? The size of the candlesticks is bigger. So when you switch to a lower time frame, you need to bring back the candlestick size to a small size. Do you understand, guys? You need to reduce the size back to a normal size that we want, like this. Do you understand? So that we can see the picture we are looking for, so that we can see a better picture of the area. Now you can see when I switch back to a lower time frame, is this not the zone on that bearish candle? Can you see the zone on the bearish candle?
It is.
Yeah.
Yes.
Rally base drop.
Oh.
Rally base drop. Rally base drop. But
can you please show me again?
Hold on. Right now, H3 time frame is not telling me whether it is Thursday or whether it is Friday, because H3 period separator is just something like this, isn't it?
Yes.
So if I want to know which day this candlestick is, I already know the dates. I already know that this is Thursday, but you can also switch back to H2 to know that, hey, this area is on Thursday, isn't it?
Yes.
Because this is the period separator on Thursday. From here to here is Thursday. So why did I say this is Thursday? Let us look at the dates. Now, whenever you are looking at the dates, don't look at the dates blindly without putting your crosshair, because you might be getting a wrong date if you don't put the crosshair. You understand? So you need to put the crosshair in the area. By putting the crosshair in the area, then I can see that the date here is 03/08/2023. 03/08/2023 is also Thursday, isn't it?
Yes.
And then this is what? This is Friday. This is Friday market. This is Friday market. This is Monday market here. 07. 08 is Tuesday market. 09 is Wednesday market, which is today. Tomorrow is going to be 10, which is going to be Thursday, and so on. So going back to the charts, we can clearly see that the market is showing us this formation, isn't it?
Yes.
And that is exactly the bearish candlestick that we have on the D1 time frame. So what you have to do, whenever you switch back from the D1 time frame to a lower time frame, whenever you switch back, remember on the D1 time frame, we just highlighted the area roughly. We haven't marked our proximal line distal line yet properly, isn't it? So, isn't it, guys? We've not marked our proximal line. We just did it roughly. So whenever you switch back to a lower time frame, you need to know how to mark out your zone properly, the way we usually mark out proximal line, distal line. You understand? Whenever when you see a formation, I believe everyone knows how to mark proximal line, distal line on a formation, isn't it? We all know how to.
Yes.
Yes.
So this is how to mark the zone, proximal line, distal line. Highlight the zone with your yellow box to mark that area as your area of concentration. Because without the yellow zone, you won't be able to know exactly what you are looking at. But if you just do it like this, and whenever you are marking the yellow zone, remember I told you guys not to do it like this. It is not okay like this. It is also not okay like this. The yellow zone is outside the box. It is also not okay like if you do it like this. It is outside the box. Make sure you just put it properly. Also, don't do it to be too small. Just make sure you do it in a moderate manner. You understand, guys?
Yes.
It is in a moderate manner. It is okay like this, right? It is okay. So you guys can see price came back to this. It means that the weekly trade, we saw the weekly trade on which day? On Thursday. We saw that weekly zone on Thursday. Market came back on which day here? What is the date when market came back to the zone? You see, market came back to touch the zone.
Monday.
And touch the zone on Monday, isn't it? And triggered the zone on Monday. When market came back to trigger the zone on Monday, you see how market is dropping down. Personally,
Wow.
I made about $2,000 plus on this trade. I believe you guys, if you saw the screenshot I took, I made plus on this trade. Okay, so that is it on this trade. And remember, when Monday market opens, we already know the alignment, isn't it?
Yes.
Remember, even before Monday market open, we know where the equilibrium line for Monday is going to be roughly. So, however, whenever Monday market opens, you need to go back and mark out your weekly equilibrium line properly. Because remember, before we didn't have the weekly equilibrium line before. We only have it at the back of our what? At the back of our mind. At the back of our mind. So now you don't have to leave it at the back of your mind anymore. Since we already have it, you need to go back and mark it since we already have it now. You understand? Go back and mark it. Is that clear? Do you understand? Any question on this before we move on to other pairs? Or should I analyze another pair for you to understand again?
Please, can I see the cell formation on day one?
Do you mean the cell candle on D1, not formation? It is a cell candle on D1. This is the candle on D1. So you can see that's hold on, guys. Hold on. The most interesting part is that remember what I'm telling you guys just a few minutes ago on that candlestick, on that supply and demand candle I showed you the picture, right? Remember on the picture I told you guys that if we switch to a lower time frame, that's our smaller time frame yellow zone. Whenever we switch to a D1 time frame, this zone must be sitting in a supply side of the candle, isn't it?
Yes.
If I happen to switch to a D1 time frame now, and this my yellow zone is not sitting on the supply area of the bearish candle, and it is sitting on the body of the candle, it is not good. But you can see right now, I believe you guys can see that right now, the yellow zone is sitting where? At the supply side, isn't it? Of the candle, isn't it?
Yes.
Because we all know that the supply of the candle is anywhere from here to here, right?
Yeah.
That is the supply of the candle. So before you start asking any question, let me analyze another one. All right, let me analyze another one. So let us analyze AUD USD. Okay, let us analyze GBP. Okay, let us analyze NZD-JPY. Okay, NZD-JPY, guys, NZD-JPY. Now let me remove these ones here that I did. Let me just put a fresh template. Now remember the first thing we usually do. So let me show you how I'm going to do the analysis. The first thing I'm going to do, mark my monthly equilibrium line. The candlestick is looking too squeezed here. If you are not seeing where you need to mark it, you can zoom it out a little bit. For those who their eyes is paining them a little bit, you can just zoom it out. You understand? So that you don't stress the veins in your eyes. You understand? So that don't stress the veins in your eyes. Just zoom it out. When you zoom it out, then you can mark it at the opening of the bearish. The monthly equilibrium line is a blue candle, is a blue color line. Then mark it out there, double click on the line to lock it. Then go back to the H3 time frame. Remember, going back to the H3 time frame, I'm not marking the weekly equilibrium line. I'm only trying to see if the equilibrium line is a sell alignment or if it is a buy alignment. I'm not marking it. I'm only marking it at the back of my mind. You understand? I'm only going to be marking it at the back of my mind. Right now, I can see that the market is around here. Market as at the time of the analysis, these candlesticks, these areas were not there yet. We didn't have any candlestick on the period separator, isn't it? So this is what we have. So it means that market price, remember current market price is around this level as at the time of the analysis, towards the ending of the trading day last week. So it means that automatically the blue line is far above, far above. Then the green line, even though it has not happened yet, what I know is that Monday market is going to open anywhere around this level. It can open anywhere here, anywhere here. Anywhere it opens, it is still going to be what? A sell alignment automatically, right, guys?
Yeah.
So what am I going to do next? What I'm going to do next after I see that the alignment is going to be a sell alignment, remember the alignment I have is at the back of my mind, isn't it? Sell alignment at the back of my mind. So what I need to do next is to switch to the D1 time frame. Switch it to the D1 time frame now. So on the D1 time frame, I need to zoom out the candle. Always zoom it out to make the candlestick look a little bit bigger like this. You understand? So that you determine if it is a square candle or if it is a rectangle candle. Do you understand, guys?
Yeah.
Now, let me determine the date on Friday and the date on Thursday, because remember, I'm trying to erase what has not happened yet. Because as at the time of the analysis, these ones here, they've not happened yet. As at the time of the analysis, isn't it?
Yeah.
Monday has not happened yet. So what we have right now is just Friday. So what is the date here? For me to look at the date, I need to look at this area. I need to use my cross here. I need to use the cross here to see the date on this candle. Okay, this is also a Monday candle. As you can see, this bullish candle is also a Monday candle. Let me erase it. You know the reason why I'm erasing it, right?
Yes.
It has not happened yet. As at the time I was doing that analysis last week. What am I going to do? All right, checking the dates now again. Checking the dates on this bearish candle. Now, this bearish candlestick is the candle on Friday, isn't it? Isn't it, guys? This is the Friday candle.
Yes.
Now, this Friday candle, is this a good candlestick?
No.
No.
No, this is not a good candle because it looks like square, Mr. Lindo, isn't it?
Yes.
So automatically disqualified. This is not a good candle, automatically disqualified. It means look for the next candle. The next candle, the reason why we are looking at the next candle is because we are looking for a sell alignment and we are only looking at a bearish candle. If the next candlestick is a bullish candle, then look for the next candlestick above that bullish candle. Do you understand?
Okay.
Let us assume, look at this. Let us assume that this candlestick is a bullish candle now, for example.
Yeah.
Let us assume that this candlestick is not a bearish candle, it is a bullish candle.
Yeah.
Then I'm going to look at the candle above it. Which one is above it? Is it not this one?
Yeah.
Yes.
I held it
So
bearish
what about
candle.
which area is the supply of this candle that is above it? The supply of the candle is from here to here, isn't it?
Yes.
Yes.
This is the supply area of the candle. I hope everyone is following, right? Are you following?
Yes.
Yes.
All right. Let's see. Let me erase this. All right. Friday candle is not good, so we ignore it, isn't it? We ignore it.
Yeah.
Then Thursday candle is the one that is good, isn't it?
Yes.
Now, what is the date on this candle if we check? You can see this is telling us 02, isn't it? This is 02 August. That is why I said always put your cross here to know the right date, okay? If you
Yeah.
put the cross here, you should be able to know the right days that this candle is 03, not 2. Can you see that, guys?
Yes.
Yes.
So you can see 03, and we all know 0308 is Thursday. So automatically that's a Thursday candle. Then it's on that Thursday candle, we can see this is a good Thursday candle. It is a good candle with a rectangular body, right? So what you have to do, remember what you need to do next. What you need to do next is to use your proximal line, distal line tool to highlight the supply of that candle, right? Then after highlighting the supply of that candle, what is the next thing we need to do? We need to switch to a lower time frame. We need to switch to a lower time frame to look for the formation on that candle. You can see when I switch to a lower time frame now, which formation is on that area? Is it not this one?
Yes.
Yes.
You can see this is why I said this is the most easiest way to look for formations and so on and so forth. All right. So so now what I need to do is to do what? To mark out that formation properly by switching to a lower time frame more to mark out my proximal line, distal line in a more proper way, in a more proper manner, right?
Wow.
So you can see this is the area.
Wow.
Rally base drop. That's the formation. Rally base drop. Mr. Lindo, are you following, sir?
Yes, I'm still here following and watching and just in amazement.
So you need to highlight the area. When you highlight the area, you can see how price came back to the zone on which day. Price came back to the zone. Let's see the dates. Price came back to the zone on Tuesday. Isn't it?
Okay. Oh, is it Tuesday?
Yeah. This is 0.
I think it should be the first blue.
No. The blue here is also Tuesday. Look at it, sir. You know, this is the period separator, right?
Yes.
So the candle here is everything is in Tuesday. Everything here is Tuesday.
Tuesday. Yeah.
Isn't it? So you can
let's put the cross there.
Okay, let me put the cross here. You can see the dates. You can see the date on the area.
Yes, it's Tuesday.
What? 08 is Tuesday. Yesterday is 08. You understand? Yeah. So it means that we analyzed this trade on what? On Thursday last week. We analyzed this area last week, Thursday. Market price came back to a new week, Tuesday, and then trigger and then give us a 1:4 or 1:3. Okay.
My goodness.
You remember I said banks usually have uncompleted transaction on the previous week. They usually come back to a new week to complete it. Sometimes they don't usually wait for a new week to complete it. Sometimes they usually come back Friday. Towards the ending of the session on Friday, they usually come back to fill it up on Friday, and then they complete it. You understand? I'm going to show you some examples, but time is not going to permit me. When this Zoom is going to end in few seconds. So whenever this Zoom ends, please join back automatically. Don't wait for me to tell you to join back. Please make sure you join back. It is very important. After we join Zoom again, then it is going to be the last Zoom for today. Okay, guys?